Enthusiasm backed by horse sense and persistence is the quality that most frequently makes for success. Dale Carnegie. My friends, your persistence, your horse sense is developed over daily practice. That is 10 to 15 minutes every day following our podcast, filling out your daily market worksheets once a week or weekly market worksheet, and your trade worksheet when you have a trade. Let's talk about what's going on in the markets today. We see stocks are down for the day a little over 0.3%. We see 20-year bonds up for the day 0.4%. Gold also down 0.32%. That's where we are as we end the day. As we roll into the Christmas holiday, let's talk about what we see on these charts. As always, we start with the S&P 500 on the weekly chart. Check out how we have started off this week. After 4 prior weeks of green up candles, we have pierced. We can see we've started the week off piercing the weekly trend line. We have a red open box spinning top. Now again, that open box is not a solid red down candle. It's a slowdown in the up movement. Long wick on the top, little wick on the bottom, small candle. So again, we can see that shown in the price percent oscillator where it's losing momentum heading down. Derivative oscillator appears flat on that weekly chart. Go to the 2-day chart. Now remember, that prior 2-day candle ended Thursday, so this one has ended now. It ended on Monday. We look at the price percent oscillator. We can see that we are crossing, again, trying to cross over, going down as we look at things. We can see that we have a red spinning top sitting right there on the the 2-day trend line, and we're just crossing over, going down. Now again, that's not a good portent of where things are going to go in the future, but we're going to go ahead and mark that. It can turn around as we go through the course of the week since it's such a weak crossing over. If we see a strong week as we develop, it could pull it around and turn it up, but you can expect light trading on Christmas week. Derivative oscillator continuing to lose momentum. It peaked all the way back on the 19th of November. That's our leading indicator. But again, the market's moved up quite a bit since then, sliding sideways really for the last few weeks, peaking up a little bit this last week. So again, we'll continue to watch. We look at the half-day chart. So where we see strong down move in the morning, bit of a recovery in the afternoon, derivative oscillator gaining downward momentum, price percent oscillator slowing down a little in that down movement in the afternoon. So that's where we are as we look at the S&P 500. Actually, if you hear that bugle in the background, I'm near Hill Air Force Base in Utah, and they're playing taps at the end of the day. That's quite nice. Now, let's go on to the NASDAQ 100. QQQ. What do we see going on there? Again, it's a green up candle. It was actually down a little more than the S&P, but as we look at the candle, we can see we're not reaching a higher high. Candle body smaller. It's just the first day of the latest. Still positive. We had that weekly vertical crossover. We're still positive as far as the weekly vertical crossover goes. Derivative oscillator gaining upward momentum. We go to the 2-day chart. What do we see there? 2-day is flat. Derivative oscillator losing momentum. Red spinning top from a green up candle. Indecision still above the 2-day trend line. We go to the half-day chart. We see at the end of the day it did cross over, going down. Strong down in the morning. A little bit of a recovery in the afternoon. Price percent oscillator losing momentum. So that is where we are as we start this Christmas week off. Again, expect light trading, but we are going to pay attention to these charts and see how they continue to develop for the week. One thing I noticed that we'll go ahead on this half day and we'll go ahead and rotate over our trend line to make sure that we capture that down movement. And again, that's what's so beautiful about the trading platform we use, which is the paid version of freestockcharts.com TC2000. If you look in your show notes, you have a link to it. You can save $25 if you subscribe Give yourself an early Christmas present. Treat yourself to the best software, I think, best trading platform, I think, that's out there. Now, let's move on to 20-year bonds. Still negative, been negative for a long time. Starting the week off, going down, not reaching a lower low than the prior week, but we're still negative on the weekly chart for 20-year bonds. The derivative oscillator is still losing downward momentum, but that price percent oscillator is a little more than flat, heading down. Look at the 2-day chart. What do we see there? Getting close to crossing over, but not quite doing that. After things bumped up back on the 2-day candle representing Monday and Friday, that was Friday the 11th, and that prior Monday, and then sort of tracking down since then. Again, hitting a lower low we can see than recently. And again, derivative oscillator gained downward momentum, but no crossover yet going down. Now, again, we've been looking for what? A 2-day recross going down in the same direction as the weekly. That might be coming, but it won't happen for 2 days because remember, the 2-day candle has to finish drawing, and we just finished drawing. So we go to the half-day chart. What do we see? It's still negative up in the morning and then pairing off a little in the afternoon, still up for the day 0.40%. So keep your eye over the next 2 days open for a potential 2-day recross going down. That's possible. Not saying it's going to happen. Lastly, we go to gold. What's up with gold? Gold down for the day 0.32%. Now, gold's had, strong movement over the last couple of weeks, and as we start this week, even though it was down, we can see on our Heikin Ashi candlestick the average pace is trying to move up. But that price percent oscillator is flat. Derivative oscillator still negative, losing downward momentum. What's happening with the 2-day chart? Again, we can see that 2-day Heikin Ashi candlestick is trying to gain some momentum, not reaching a higher high than the prior one. Derivative oscillator is continuing to gain upward momentum. Price percent oscillator losing a little bit of momentum. That is where we are as far as the 2-day goes on gold. Now we go to the half-day chart. What do we see there? Well, we see where gold peaked back on the morning of Thursday the 17th, and it's sort of been rolling over and tracking down since then. So we'll continue to watch and see what's happening. Remember, we've got a 2-day heading up. We've got a weekly down. So if that 2-day starts losing a lot of momentum and crosses back over going down, we can short gold again in a practice trade. If that 2-day continues with its momentum and at some point pulls gold back over and gold really starts rallying, I can't wait to ride gold up in my next practice trade if that happens. Otherwise, I'll short it. That's where we are, folks, as we end the day on Monday, this holiday week. So appreciate you being with us. And again, treat yourself to an early Christmas present. Maybe you subscribe to TC 2000 or you buy our book, Charting Your Way to Wealth. We have an autographed copy ready for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.